Welcome to the Holistic Accountant Podcast. The aim of this podcast is to demonstrate that many issues that your accountant deals with are multifaceted. Therefore, a holistic accountant's job is really to not only help you improve your business, but also help you improve your personal financial position. Before we get started today, I'd like to ask two favours. Firstly, if you enjoy this podcast, please share it amongst friends or colleagues that you think will all equally get some value from it. And or leave a rating where you listen to this podcast. It would help us tremendously. Secondly, if there are any topics that you're interested in, please let us know. There's an email address in the show notes that you can just drop us a quick email and ask us to present on a particular topic. Okay, let's get started. Okay, so today Mena and I want to talk about tax minimisation strategies for employees. I mean, a lot of the episodes on this podcast are really aimed at self-employed business people, but of course we don't want to leave employees out, and we want to talk about, what can they do to minimise tax, Mena?
The truth is, it's limited.
So it's just all bad news, is that
pretty
right?
much. So outside, your standard motor vehicle deductions, home office expenses, and the like, there's very limited avenues in terms that will save you material dollars in tax. But what we generally counsel clients to do is look at avenues that not only save you tax, but also help you build wealth. Now, the only way to save $1 in tax is actually by spending money. So either spend money the right way or the wrong way. Now, what we usually tell clients is that, maybe go out, buy a property and, an investment grade property that is, and you can save some money or some tax money via negative gearing. So that not only works, throughout the next 10, 20 years, saving you, some tax dollars, but also helps you build wealth in the long term.
Yeah, I mean, I used to receive calls from clients saying, Stuart, I want to buy a property this year because I paid too much tax last year. And of course, I can understand their way they're thinking, but really that's not the reason to buy a property. The reason to invest in property is to build personal wealth, and any tax saving is merely just a positive consequence of that original decisions, but not the reason for it. So as Mena said, really focus on what's going to ultimately improve your financial position on an after-tax basis in the long run. And then the other way of looking at it as an employee is that, look, if I have limited ability to impact or influence the amount of income tax that I pay while I'm working, then really what I want to do is make sure that I put most of my effort into ensuring that my investments are tax effective as possible. So that is, let's minimise any tax that I pay on investment earnings while I'm working, and let's try and minimise tax to zero on investment earnings when I'm in retirement. And I think that's going to give you kind of better bang for buck from that perspective. So what are some of the things that employees, although they're limited, Mena, as you've rightly pointed out, what are some of the things that employees can do?
The other thing is margin lending, for example, or investing borrowing to invest in shares or managed funds and so forth, but obviously with the right guidance and advice. The interest on that loan that you're using to purchase assets or purchase, your shares or ETFs or whatever it could be, becomes tax deductible. So again, it's a method that helps you sort of build wealth in the long term whilst providing some tax savings in the interim.
Yeah, so I mean, gearing as a strategy is very powerful from a taxation perspective, but equally as powerful from a wealth accumulation perspective if you're doing it right. And at the risk of the risk of sort of stating the obvious, it's really about bringing forward future income and investing it today. So, for example, if I worked out that I had a $50,000 investable surplus cash flow per annum, I could obviously invest that $50,000 over the next 20 years. It's $1 million. Or alternatively, I could go and borrow $1 million today and then put that $50,000 towards the loan repayment. And the benefit is that I get to invest a hell of a lot more today sooner and hold that investment for 20 years and benefit from compounding capital growth. But most importantly, I can use pre-tax dollars to pay for the cost of that borrowing. Which is really important because post-tax dollars, particularly if you're on a high income, it's an expensive way to build wealth, whereas you can use pre-tax. When I say pre-tax dollars, the reason that is obviously is because I get to claim a deduction for the interest earned. So really, I'm using my pre-tax money to pay for that interest cost, and that's why it is really so powerful.
And the last thing we generally recommend is super contributions. Obviously, if cash flow allows it, topping up your super each year not only obviously provides you a tax deduction, but also sets a nest egg aside for you, and obviously has consequences of the compounding investment returns over the years.
Yeah, regular forced savings, that's the way I look at it. It sort of forces you to save that money, lock it away in what is ultimately a very tax-effective environment, and let it compound for many years. So really, in summary, there's not a heap that employees can do. Gearing's a really effective strategy that not only builds wealth but saves tax. Super contributions, and lastly, paying attention to making sure, whilst you might have to pay a lot of tax while you're working, making sure you don't pay any tax when you're in retirement by making sure you're structuring your investment ownership effectively. Okay, that's it for today. Until next week, bye for now.